Let's talk about VA short sales. It's not really a short sale. What it is a VA compromise sale. The words are interchangeable, but it's a compromise sale. And I've had a couple clients come up to me and say, hey, my realtor's saying I should short sell my home. Don't do it. As a matter of fact, when you get a realtor that says that, you probably want to get a second opinion. Here's what happens when you short sell. Your credit score is going to go down. The average is from between 85 and 160 points. It's going to impact your credit score for about 7 years. And guess what? Here's the crazy thing. The cost to call your loan servicer, which may provide you the answer, it's $0. The cost to call me, your loan officer, it's also $0. So what happens? Well, the VA, again, calls it a compromise sale, and here's exactly how it works. Basically, if the veteran owns more on the VA loan than what the home is worth, the VA can step in, they pay the lender the shortfall, this is called a compromise claim, and the sale closes. It is a VA's official version of a short sale, and the two terms, again, are interchangeable. Here's what happens. So the VA contacts the servicer. The VA's demonstrated financial hardship. Maybe they got a PCS, maybe they got a job loss or a divorce. Right now, a lot of it has to do with people PCSing. The VA and the lender will review the property at fair market value. So they're going to do an appraisal, all right? The VA is going to do an appraisal to make sure that they know the value of the home. And then the sale closes and the VA will pay the compromise claim. The veteran's entitlement becomes tied up. It's not forgiven. You don't get that entitlement back. It is tied up. And trust me, you will see it on your certificate of eligibility. But what does that even mean? So what happens to your VA home loan benefit after a compromise sale? Well, one, the VA is going to pay the compromise claim. This is the shortfall to the lender on your behalf. The paid out amount becomes tied up entitlement. All right, it's not forgiven. You may only have basic entitlement left for a new VA loan. In some cases, and I've seen it where, especially in Hawaii, you don't have enough entitlement left to actually buy a home with no money down again. Short term, the short sale made sense, but long term, you've robbed yourself of this incredible benefit that you have. In Hawaii's high cost market, basic entitlement alone is rarely enough for a no down payment purchase. So how do you restore your full entitlement? It's only restored once the VA is repaid in full. So let's take a look at this scenario here. So there's a $50,000 shortfall, and the VA pays that compromise sales claim to close your short sale. Your max entitlement was $127,600. Now you've lost $50,000 of that entitlement. So you have $77,600 in remaining entitlement. Your max no money down entitlement remaining is basically 4 times that $77,000. So $310,400 is your remaining no money down entitlement. Now let's look at the home price in Hawaii. You're looking at $800,000 home. The down payment needed for you to buy that home is going to be $122,400. Now, that's going to severely restrict your ability to buy a home in the future using this hard-earned VA benefit. There are other options. All right, before you do anything, make this one call. Call your loan servicer first. Request the loss mitigation department and ask about all options available to you before you have a realtor conversation. And trust me, know the realtor red flags. A realtor who's demanding full commission on a VA compromise sale is a conflict of interest. Commissions are typically reduced. Get a second opinion. All right, especially on this island, there are so many realtors who are going to work with you to help you out and not basically rob you of any more money or any more entitlement because they want their full 3% commission. Engage a VA-approved HUD counselor. This is free, independent advice. It's not paid for by me or your realtor. All right, they represent only you. And then, you know what? Again, protect your credit throughout. Do not start missing payments. Stay current on your payments if at all possible. No late marks on top of a compromise sale dramatically improves your recovery timeline for your credit score. And the VA Homeowner Assistant Hotline and the HUD Housing Counselor, their phone numbers are below. And you can always go to benefits.va.gov/home loans, and you can get information there as well. And let me tell you what the other option is. So one of the alternatives, and some people say, I don't want to do this, but I've done it. I'm not going to tell you to do something that I've never done. I owned a home during the Great Recession, and my home value dropped from $390,000 to $330,000. And I couldn't sell my home. I could have foreclosed, but that wasn't an option because I'm not a quitter, all right? And I ended up paying out of pocket. I kept the home, and I paid the difference in the rent and the mortgage out of pocket. What that did for me, I tell you what, I didn't use my VA loan, but if I had used my VA loan, my VA entitlement would have stayed intact. There had been no compromise claim filed. Also, there had been no credit damage because my mortgage payment was getting paid every single month. And remember this, short-term pain, long-term gain. Hawaii home ownership the value in Hawaii home ownership is the value and appreciation over time. And I just had a client I was talking to, and we were having this conversation. He was like, Larry, you told me when I bought, if I'm not going to own the home for 5 years, there's no guarantee that I'll be able to sell for profit. And unfortunately, he's actually moving 3 years later. He thought he would stay here longer, but he had another job opportunity. And we've had this conversation, and thankfully he called me because now he's not considering doing a short sale. And that rental income potential, it can offset the payment, all right, while you regroup. Yeah, you're paying some out of pocket, but you're not losing that money. All right, you're investing that money into your home. It's like a TSP. You're putting out maybe $500, $800, $1,000. Your tenant is putting $2,000, $3,000 towards that piggy bank that you own a home. It is the most powerful long-term move to keep the home and pay out of pocket. Another option is to bring $30,000 to $40,000 to cover the shortfall. This is another clean exit, and there is no entitlement loss. You basically, here's what's going to happen. You're going to sell the home. There's a payment gap. Maybe it's $30,000, maybe it's $40,000. You pay that at closing so you don't do a short sale. Again, that is better. You're doing a standard sale. You're paying the loan in full. There's no short sale notation on your credit report. It is a clean exit. All right, your VA entitlement is fully restored immediately after closing. There is no waiting period. You can use your entitlement immediately after you sell, and it's often cheaper than the long-term cost of lost entitlement. Now, I will tell you this: these are two options that are better than short sale. Personally, I would keep the home and pay out of pocket, especially if you're going to have to bring in $30,000 to $40,000. Think of it this way. You paying $1,000 out of pocket every month. All right. You got 30 months before you've lost that 30, or you've used up that 30,000 you would have had to use to pay off to pay off the loan in a standard sale. All right. In 30 months, what could happen to the home price appreciation? I will tell you this. If I would have held my home, all right, that I could have short sell. I actually sold the home, and I sold it for I made maybe $60,000 on it. All right, and that's because I had so much equity built up in the property by the time I sold it. If I would have held that home for another 2 years, actually not even 2 years, another year, I would have made over $150,000 on the home. All right, but I had my short-term blinders on. I wasn't looking at the big picture. And the big picture is, if I would have held the home for another 2 years, I would have made over $250,000. I sold it for $376,000. Today it's worth nearly $600,000. My biggest mistake in real estate was selling that home. I didn't come out of pocket, but this goes back to keeping the home and paying out of pocket. A little short-term pain for a lot of long-term gain. All right, hey, again, I'm not going to tell anybody to do anything that I wouldn't do. Your VA entitlement was earned. Don't lose it due to a short sale. If you had any questions or you're concerned about not being able to sell your home or having to do a short sale, text me, short sale. I will reach out to you and I will help you come up with the solution that makes the most sense for you, because everybody's a little different.